Hey guys, what's up? How's it going? Robin here once again for today's video. And in today's video, I'm going to be showing you guys 8 Canadian stocks in my REIT investing portfolio with Wealthsimple Trade. Alright guys, so I got the idea to this video from my previous video where I showed you guys my 15 Canadian dividend based stocks. So check out that video if you guys haven't already. And I just want to say really quickly, a big thanks for all the views, all the comments, all the likes in that video. That video has probably been the best performing video on my channel so far, and I'm super excited about it. And I just want to say a big thank you to everybody who supports me, everybody who subscribes to the channel, because you guys have just made me super happy with that video. So because that video did so good, I'm going to be doing this video where I'm going to showcasing to you guys my REIT stocks, my REIT portfolio. We're going to be doing a deep dive analysis. I'm going to show you guys every single REIT that I hold, my earnings, how my stocks have been doing ever since we first started this REIT portfolio back in early March. So once again, before we dive into the portfolio and I show you guys my stocks, I just want to say really quickly, if you guys are enjoying this content, be sure to give it a big thumbs up and subscribe to the channel if you guys want more Canadian-based stock market videos. Alright, let's jump into our REIT and let's see how our REITs have been doing so far in 2020. Alright everybody, what's up? How's it going? Welcome to the REIT portfolio. As I mentioned earlier in this video, guys, if you guys missed my dividend portfolio video that I did the other day, be sure to check that out, as I did do a deep dive, deep analysis into my dividend stocks. And in today's video, I'm going to do a deep dive and deep analysis into my Canadian REITs. So this is part of the same basic portfolio, so to speak. I just have my REITs separate than my dividend stocks because I want to track them separately. And I do have them in a personal account, as you guys can see, but going into the future, I will most likely 100% put these into a tax-free savings account, as I've learned over time that REITs, because they make a good chunk of their money in dividends, you want to stick them in a tax-free savings account so they don't get taxed as much. But also, right now, I think REITs have a lot of potential to like just grow tons in value. And we're going to talk about this throughout this video, why I think that is. So I'm definitely going to probably be putting them into a tax-free savings account towards the end of the year. I just got to figure out how, like, kind of what I want to do, and that's something I'm definitely looking into. So we'll just go over we'll go over the current standings with the portfolio really quickly. Then we'll talk about each stock I have individually, and we'll just go from there, kind of thing. So first of all, over the course of one day, our $3,084 Canadian 100% Canadian REIT portfolio is down about 0.70 cents, which is about $19. Over the course of 1 week, we are down about $4.86, which is 0.18%. So REITs have gone down a little bit in the past week. Over the past month, we are up, of course, though, because everything is kind of up overall, especially Canadian stocks. But our REIT stocks are up 2% over the past month, which is $56, so it's not too shabby. And then over the course of 3 months, we are up 6.26%, which is pretty good. Like, that's pretty solid, which is $173 Canadian. And then over all time, we are up about almost 2%, which is $54. And keep in mind, this is before a crash, because we did start this portfolio, and I think it was like February or March or something like that. So it was like just before the crash happened, and we've been putting money into these REITs, every single week kind of thing, since the crash happened. So the funny thing about Canadian real estate right now is, for the past couple months, there's been a lot of talk about whether or not real estate is going to either crash hard or it's going to kind of just keep booming, keep going up, because over the past couple years, it seems like nothing is stopping the Canadian real estate market. It just keeps going up no matter what, and we're kind of seeing this right now, right? A lot of money got injected into the economy. A lot of people got help with their mortgages and stuff like that. And at least for the time being, companies and whatnot are staying afloat to the best they can, and that's kind of helped the real estate sector, right? And a lot of REITs and whatnot have kind of gotten some help in that regard. But the big question over time is kind of, as things like CERB and some of the funding starts kind of going away, will these companies be able to hold their assets? Will they be able to rent them out to people? Will people be able to pay their rent? All that kind of stuff. So there's a little bit of uncertainty in the real estate market, but I do believe there is huge potential for them right now, and a lot of them are still priced relatively low, and they still have pretty good dividend yields. So if you want to take on a little bit of risk, I think REITs, especially Canadian REITs, are a great opportunity right now. But just kind of understand that they do come at a risk, because we don't know what's going to happen. It could take we could boom over the next couple of years, or REITs could crash and we lose a lot of money and it might take forever for them to go up, or maybe just stocks outperform in the long run. So as you guys can see, I don't have a good, I have a small amount of money in REITs, but I don't have like a huge amount of money. And later on in the video, guys, after I go through the stocks individually here, I'll actually go through like my monthly earnings, my dividend earnings. So if you stick around for the end of the video, I'll show you guys how much money I actually make from these REITs on a monthly basis since we first started this portfolio. So anyways, enough of that. Let's go on with the actual stocks inside the portfolio. So this portfolio, I haven't built up too much like I did my dividend portfolio, and I'm definitely looking for some REITs here and there to add to the portfolio. So if you guys have any recommendations for any REITs that are Canadian based, because I do want this to be a 100% Canadian based fund, let me know in the comments of this video. And also, just like the last video I did, let me know your best performing REIT in the comments as well, so we can kind of compare whatnot and we get some ideas for the future. But the very first REIT that I have here is one of my favorite REITs, really solid, very low price REIT, and it's still kind of recovering since the market crash, is Brookfield Property Partners LP. And this goes for about $16 Canadian right now. And I have about 13 shares in my portfolio, which accounts for $207, 7.47% of my portfolio. And overall return is 8.76% with $16. So this is a really solid REIT. I bought this about a month or two ago, and I'm going to keep buying this one because I do think this is a really solid company, really solid opportunity for growth. Like, they got hit pretty hard, but I think they're going to recover, and if you invest in them now, I think there's a lot of gains to happen over the next couple months to maybe a couple years kind of thing. And the yield right now is 14%. I don't know if that's accurate. I'm going to have to double check that to see if it is, but that sounds insanely high, so I don't think that's actually accurate. But you can see, they're slowly starting to recover just like everything else. So in the past month, Brookfield is up 4.59%. So like I said, I think it's still a great opportunity to buy right now. They're still low overall throughout the entire year. As you guys can see, they still have a lot of recovery to do, and a lot of these REITs are like that. So if real estate is ever going to recover in Canada, or if you ever think real estate is going to keep going up, you need to buy into these REITs, because I think there's a great opportunity for a lot of people to make a lot of money. But just like I said, understand there is a little bit of risk, so maybe don't go too crazy, if that makes sense. The next one we have is Dream Industrial Real Estate REIT. This is one I just bought. I think it was last week I bought it. I just got into this one. So I did a video comparing my top 3 Canadian REITs, and this is one of the ones that really caught my eye, and this is a really cool REIT. So once again, if we look over the past year, this one has taken a pretty big dive at the start of the year, and they're starting to slowly recover. So once again, I think it's still a good opportunity to buy, and they're a nice industrial-based REIT that operates all over the world. So they're not just Canadian-based. They're a Canadian-based company, but they have stuff everywhere in the world, so it's pretty cool. And because we just bought into this one, we only have 2 shares, and it's only 0.8% of the portfolio, and our return obviously is down a little bit because markets kind of went down a little bit over the past couple days, but we did just buy it, so we'll have to wait a while to see how that one performs. But a nice yield of 6.31%, so pretty good yield. And because of all these high yields, I definitely want to stick them into a tax-free savings account, just so they can keep growing and we can take advantage of that going into the future. The next one we have is hr REIT. I bought this one a lot when the market crash first happened, because this is one of the ones that took a huge dive, and they still haven't recovered a ton yet. Like, you can see a little bit of recovery, but there's still lots of room for growth in this one. As you guys can see, it's down 50% in the past year. So I think, once again, great opportunity for this one. Just understand this one, there is risk because there's uncertainty. There's a lot of debt, there's a lot of things that need to get paid for, and there's a lot of uncertainty whether they're going to be able to kind of get that income back going. So just understand that when you invest in these REITs. But once again, I bought a lot of shares for this one. It's pretty cheap. 35 shares, 13% of the portfolio, which is quite a bit actually, and almost a 7% gain. So that's pretty solid with hr REIT. This isn't one I would go too crazy with, but I think it's one of the ones that you could potentially make a good return over the next little while if you wanted to invest into. And once again, the yield says 11.66%, but I think that might be wrong from Wealthsimple Trade's perspective. Or maybe that's just saying in my account overall. I'm not too sure about that. Next one we have is probably one of the biggest and most popular. Actually, it is the biggest REIT in Canada, and probably one of the most popular ones, and probably one of the most solid ones as well. And this is RioCan. RioCan is if there's any REIT that's probably going to do good, it's probably going to be RioCan. And as you guys can see, once again, this is another one that took in a big hit, 40% in the past year, great opportunity to invest in if you think real estate is going to rise. And they've kind of gone up, kind of gone down, kind of gone up, kind of go down kind of thing. But overall, I have 34 shares, and I've been investing into this one over the past, I'd say 2 or 3 months pretty aggressively. So I still need to wait a little while to see those gains, obviously. But we have 34 shares, total value $527, 19% of my portfolio, and sitting at a 1% return overall. But this one has a nice high yield of 9%. And that is accurate. So 9% yield for REIT. So obviously this one, you're going to get a lot of those earnings going towards the end of the year. So yeah, we'll have to take a peek going towards the end of 2020 and get a real idea of how well this one is going to recover. But I think there is good opportunity REIT. So that's definitely one I'm going to be buying a lot into. Next one we have is CI First Asset Canadian REIT. This is one I bought way back when I first started this portfolio. I think somebody recommended it to me, and I've just kind of been buying it, and it's been doing pretty good. So this one has, if we look over the past, let's go 1 year return, sorry. This one has recovered quite a bit, so it's not, so minus 15% is still good, and it is on a path of recovery. So this one is doing pretty good. 14 shares, 7.82%, so about 8% of the portfolio, and a return of 5.34%, and a, medium yield, more sustainable yield of 5.23%. So that is nice to see, like a lower yield, because it means more sustainability. And if you guys want, definitely take a peek at some of these, like check out some of these companies' finances, like go into Google and type out like their payout ratios, see how much debt they have, how much money they're actually making, because that is important to compare when you're looking at some of these REITs. And some of them are like massively high, where they're owing a lot of money and their income has kind of been cut off. So you got to be a little bit careful, but it looks like some of them are starting to kind of get rolling again, and their income is starting to rise. They're starting to kind of recover that, and their stock price is starting to grow as well. So it's just a waiting game. We have to wait and see. But I think overall, most of these REITs are pretty solid, and that's why I've kind of chosen to invest in like good solid REITs, because those are the ones that are going to last, right? So when the recovery does happen, at least they'll still be there, kind of thing. Next one we have is VRE. This is the Vanguard fund, really, really solid fund. This makes up the base of my portfolio. I'm going to be putting the most of my money into VRE and maybe XRE. I have a lot of shares of XRE in this side of this portfolio. So those are the two that I've been kind of been buying. But I've been buying these ones consistently since I started this portfolio. So they're a little bit low in returnings because they took a big drop, obviously, and we're just kind of recovering from them. And they do pay monthly, so we'll get once again, we'll get a good chunk of those returns going in through the end of the year. And we have been buying this consistently. So yeah, we're going to kind of get a leveled off return, but as time goes on, it should start to rise, kind of thing. And we have 25 shares of VRE, total value is almost $700, 24% of my portfolio, so quite a bit. And today's return is about almost -1, so about breaking even. But once again, that's just because we've been buying it all the time. So we've been buying it when it's up, we've been buying when it's down. I think overall it's going to do well, and it does pay a nice monthly dividend yield. And it's about a yield about 6.51%, so really solid yield. So if it can get some gains and bounce back, it should do pretty well. Same thing goes for XRE. This is a iShares fund, really, really solid REIT that's performed pretty well. Once again, we've just been buying it consistently throughout the year. We had a bunch of shares before the crash, so obviously we still are sitting at a pretty good low. But we have about $464, 16 to 17% of the portfolio, and -4%. So we're on the path to recovery with this one. This was sitting a lot lower, but since we've been buying it, it's been slowly kind of recovering a little bit. Like XRE still has a long ways to go, but they are slowly starting to recover. So that's kind of been getting back up there. And once again, they have a nice yield of 6%, and it does pay monthly. So we should see those returns start to stack up going towards the end of the year. And the last REIT we have here is one that I haven't put too much time into, but I have bought a couple shares. It's ZRE. This is Bank of Montreal based ETF. We have 15 shares, 10% of the portfolio, and it's down about 3% with a 5.39% dividend yield. I don't know if I'm going to be buying too much of this one. I've been buying a few shares here and there of this guy, but we'll have to wait in time. This might be one that I'm not too sure if I'm going to keep buying. But pretty much everything else in this portfolio I'm going to keep stacking up on. Overall, I just need to find some more REITs. So once again, if you guys can recommend any REITs in the comment section, please do so. Specifically Canadian ones, because once again, I want them to be Canadian based, so that like if we're going to stick these into a tax-free savings account, they can be 100% tax-free, right? And they need to be Canadian in order to do that. So yeah, if you guys have any Canadian REITs, please let me know. But that's pretty much the entire portfolio. I'm just going to take a peek at the dividends to show you guys some of the dividends I've been earning off it for any of you guys who are new and want to see some dividends. So if we go dividends, we go personal account, you can see like even though we don't have a ton of shares and this portfolio isn't big, these REITs, like the dividends do stack up, especially since they do pay on a monthly basis. So look at this, August 11th, $1.74 from VRE. REIT, $4 dividend. That's probably my highest dividend I've ever gotten in all my portfolios. And it's a monthly dividend, right? So as long as these REITs don't cut their dividends too much, shouldn't be too bad. H&R REIT, $1.84, ZRE, $1.35. XRE $1.74, and we're just taking those dividends and we're reinvesting them back into the portfolio to keep it growing. So that's the dividends. Now let's take a quick peek at the monthly returns so you guys can see how this portfolio has actually been doing since we first started it. Alright guys, so just to kind of close up this video really quickly here, I'll show you guys the dividend investing spreadsheet for my REITs. This is just my REIT portfolio once again, and once again I will mention, if you guys missed my dividend based portfolio, I did that in the last video. So I did a deep dive analysis into my dividend stocks in the last video, so check that out if you guys missed that. Today we're just focusing 100% on the REITs, and once again I do monthly updates on my entire portfolios, so check those out as well. I've done a couple of those since I started building them in about January or so, so check those videos out as well if you guys want to see those. But anyways, dividends earned in the first month of investing into REITs was $1.24. Month 2 was $2.28, $4.36 in the third month. The fourth month was $6.75. Then we went up to $8 in July, and then August, which is our 6th month, we're about to $9 per month. So we're almost at $10 and doing pretty good so far. And you can see the contributions here. So obviously when we first started the portfolio, we were putting about $100 a week. And then in about July, just like my dividend portfolio, I've really ramped it up and I'm sticking all my free cash flow into REITs because I think right now, REITs and dividend stocks, because I think right now is the time to invest in the stock market. Should have did it in March, but you know, things were going on and stuff like that. I did invest a lot of money like in March and April and June, but you know, there's obviously a lot of things going on. But right now I'm putting as much as I can, and I think now is the time to make money. So I'm putting as much money as I can into these REITs and dividend stocks to hopefully grow them. But total dividends are $31.59, and total contributions, I don't think this is accurate. I'm gonna have to update that. I don't think that's accurate. So just understand that I think it's closer to about 3,000 or something like that, right? So ignore that number, that's not accurate. But total dividends earned $31, and once again we've just been reinvesting those. So that's the REIT portfolio, guys. So let me know what you guys think in the comment section. I know this was another long video, but thanks everybody for joining me and watching these videos. If you guys have any questions, let me know. I'll try to answer them the best that I can. But thanks for watching, guys. If you guys enjoyed the video, please give it a big thumbs up and subscribe to the channel if you guys want more Canadian-based investing content. So thanks for joining me here today, guys. Have yourself a good day, and I'll see you guys later.